Hi there, welcome to Grain TV. It's Monday, March 20th. I'm Kevin McNew. Let's take a look at GrainEdge's trading platform and see how we traded throughout the day. Sunday night started out in positive territory. Beans were up as much as 8 at one point, but by morning the rally seemed to fizzle. On the opening bell at 8:30 this morning, grains headed lower. Beans tried to make a few attempts to the highs at 10.08 before falling back below $10 for the last half of the session. At the end of the day, grains made a feeble attempt to correct off the lows, but by close, corn settled down 4, wheat off 6, and soybeans were off a half a cent. Welcome back. Let's talk about some of the news that was going on today. First of all, this morning, USDA gave some flash sales announcement. This time, 132,000 metric tons of corn sold to South Korea, but overall, that really wasn't enough to sort of stem the tide that was moving the market lower today. Really sort of the negative factor that was shaping the market was really the wheat market, where we were seeing forecasts for the next 2 weeks that call for good chances of rain over the southern plain states that has been noticeably dry. In particular, if you look at the maps in the next 2 weeks, central Kansas is expected to get anywhere from 2 to 3 inches of rain over that time period. So while it may not be a drought buster, it is certainly a welcome change from the last 3 months that has been exceptionally dry, and that certainly got the wheat market moving lower and carried corn along for the ride as well. Other news out today, Brazil's consultancy AgriConsult said that they expect the Brazilian soybean crop to be a whopping 111 million metric tons. That's up from their previous forecast of 107.8 and above USDA's latest forecast in March of 108. So again, more news that Brazilian crop is going to be good. Right now, the pace of harvest is about 62% of the soybean crop is cut there versus 56%. So we expect, more and more competition as we get into the second half of the marketing year. Let's take a look at USDA's export inspections this morning. These numbers were fairly good, but again, weren't really enough to sort of change the overall bearish attitude in the market. Corn coming in at 1.3 million metric tons, well within the range of 1.1 to 1.5. Soybeans and wheat were coming in above expectations. Soybeans at 737 versus 400 to 600 expected, and wheat a solid 624,000 versus 350 to 550 expected. But really the news continues to be negative. We continue to see an outlook for very stiff competition from South America, not only obviously from their soybean crop, but as they get further along into corn harvest. The second safrinha crop in Brazil is off to a very good start with plenty of moisture down there. So all of the things that are sort of weighing on the market right now tend to suggest lower prices. As we look at the Dees corn chart, we talked about this in the last few weeks. We set a double top around the 404 mark on Dees corn. Breaking that 388 support has sort of been a downhill slide from there. If we trace out what we think the target is based on this double top, that would put us down to the lows last fall of 376. Keep in mind that today's action was very negative. It is we saw a higher high starting on Sunday, taking out Friday's highs, but by the end of the day, we actually closed below Friday's lows. It's called an outside day, and that certainly sets the stage for potentially more weakness coming down the pipe. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you lower your commissions to only $7 a trade and help you in your grain marketing situation with cash bids from over 4,000 different grain elevators every day, give us a call at 877-472-4607 or visit us online at grainedge.com. Have a great day. We'll talk to you on Tuesday.